Hi and welcome to another daily recap. So this is day 90 and it's August 30, 2024. Today is very interesting day because I took a loss in EU and followed by a winner in EU and I got one more winner in GU. I missed one trade in XAU. I that's because then I realized during the post session analysis that it was because of the fear of losing emotion. So I just address it in this video, and I'll also take that as a precaution and not repeat that mistake again. Okay, let's start with EU. So uh, in EU there was one losing trade as well as one winning trade. The loser came in London and the winner came in New York. And both the trades, I took only the short position. In the first trade, actually, the price took my stop loss. In the second position, the same idea, but a different confirmation. And I took the shots, and it was AC, and I got my desired result. So, yeah, technically, it was a medium probability trade, but intuitively, it was very high probability. That's why I just stuck to the bearish idea and I didn't give up on the trade. That's why I entered on the second trade with the different confirmation. And it's a good winner because I followed my technical price. And yeah, this 1330 news is the main factor that you know ma- made that made my trade go to profit. So let's start with the daily. Yeah, after a long time being bullish, the price finally chopped bearish, and my expectation is the price to continue to be bearish till the price reaches this demand zone because there is nothing from which the price can react from. So the only thing that I can think of is price to continue to be bearish. I can find some H1 POIs from which the price can continue bearish, and then take profit can be till this daily demand. After the price mitigates daily demand, price can either flip it or react from it and then push up. So that is a different story. But for now, we know that the price can be bearish. So that's what I've written here. Uh, but this is daily. Yeah, this is actually the swing structure, and this is the zoomed in version. And yeah, this is the 4 hour chart. The 4 hour also it is swing structure is bullish and the internal is bearish because the daily is chalk bearish, which means the 4 hour is chalk mean internal shift is bullish. So here, same here also there is nothing from the left from which the price is reacting from. The only demand zone is present here. So I can expect the price to continue this order flow and then take out this sales and liquidity and tap into this daily mainly 4 hour demand zone or 4 hour slash daily demand zone. So that's the simple idea, but I must also bear in mind that the price can pull back to this supply and then it can push down. But to make such a strong reaction, it must react from some sort of demand, which was nothing here. So I can expect the price to come down. So that's what happened. Yeah, this zoomed in version of the 4 hour structure. And yeah, this is the H1. H1 also is swing structure is bullish and it is phase C. It is making the swing pull back, and yeah, it has already reached the discount prices, so that is one drawback of taking the shorts. But still, the high time frame narrative in high time frame bias is telling me to go for shorts because the price is not reacting from anything on the left. So I can confidently go for shorts. So you can see the intuition is clearly saying me to go for shorts. Whereas when it comes to technicals, you can see some of the key factors are missing. For example, in KC, usually the trades taken here would be high probability rather than trades taken here. So the trades taken below the fib region, that is in the discount prices, will be less probability because prices already reached discount prices and anytime the run phase can start. So it's a kind of low probability trade. But still, the high time frame is telling me to go for shorts, which means my intuition is clearly saying to go for shorts. My Then I realized that my intuition always sticks to the high time frame. So that's where I derive my intuition from. Okay, this is H1 zoom in motion, and you can see this POI from which the price can react and then push down. So I can wait to look for high chalk here, but if the price reacts strongly and then pushes strongly down, then I may miss out a very good trade. And there is a ton of imbalance here, so I don't think the price will reach out to this POI. So as already told you in the 4 hour time frame, for the price to react and go all the way up to this 4 hour supply, it needs something to react from the left. But since there is nothing on the left for me, so I think this would be my POI to go with. And although this is not a high probability POI, I'll tell you why. So one, if the price reaches this 4-hour demand without mitigating this H1 POI, then I can look for the price to chop bullish, and I can look for longs, expecting the uh, the run phase to start. That is phase V longs. Until then, I can look for quick phase C scalps. So 843 price mitigated SPY, thus I can look for shells targeting the daily demand. See, it is a non-OT region. So it is a non-OT region. So this box is not ticked. And higher time frame narrative supporting the medium time frame idea, as it is supporting and it is in line with the medium time frame order flow. So coming to the POIs, it has swept liquidity. Yeah, it has displacement. Yeah, it has displacement. It has made shift in the order flow, and yeah, it has stripped the order flow. So and it is formed during the kill zones. Inducements, actually, yeah, it is mitigated. So this order block has already been mitigated, but this could be an inducement for this. Sorry, this could be a lid for this POI because price has slightly made a pullback before pushing it down. So this would be the lid that I can look to target. Price came up, and yeah, the entry method could be LC2A or LC2B, which could be high probability, but H1 lid, I am satisfied with the H1 lid and I can take shots from here. So this is a HP trade as I'm willing to be aggressive and going to take the H1 LC1 entry. Currently waiting for the 845, this is the 845 candle to finish printing to take shots. The one mistake I did is I didn't wait for this lid to be taken. I considered this as a lid and I took the trade. So 9 o'clock I took the trade and I got stopped out. So if I had waited some more time, I would have even got the first trade right, and there could have been two profits. But that is fear of missing out. This is the first trade that is fear of missing out, and the second trade is fear of losing. So I can just write it down here. I think I'll just show you. Yeah. So this would be the correct hit. Which one led? This would be the candle that I would have taken the entry, and even this is actually 68 pips from start to end. So if I kept around 78 pips, that is 1 pip stop loss, even then I would have been stopped out. So it is fine because it is just a stop loss hunt. It's fine. So if I jump back, yeah. So this is where I took the wrong lid and I got stopped out even if I took the correct lid, but I would have got stopped out. But I'm not telling about the technical error here, but I'm just speaking about the psychological error. This psychological error is fear of losing. I mean, the fear of missing out emotion. So I could have taken this lid and started to trade using that lid, but I adjusted the lid here because of seeing this large bearish candles. Because of this bearish candle, I you know took the wrong lid and traded from the wrong lid, and I got stopped out. So actually, this is a very bad loser. So the first thing, it's a very bad losing trade because I got fear of missing out emotion. So continuing my daily recap. So this is the first trade that I got stopped out. And yeah, and in the M15, the price chalk bearish. So that was M15 confirmation entry. So I placed my trade, I took my flip from here to here, placed the trade at 61.8. Also, this is a flip zone. So there's high chance that the price could retrace here, and it did. And correct exactly at 10 a.m. GMT plus one, retraced and tagged me in. And at 13:34, all this time the price was moving sideways, and this is 5 minute chart. I just wanted to know how the liquidity was building in the lower time frames, so I just jumped into the 5 minute chart. So all this time the price was moving sideways, and it was 13:34. So this is the news candle from 13:30 to 13:35. Yeah, 13:35. So was the start of the 13:35 candle. So I knew that uh, major rejection came off during the news, so I decided that the price cannot go above this level. and also there is a ton of buy sell liquidity. So if the price goes above this level during the news house, then definitely my initial stop will be taken out. So I just pull my stop loss up to just above this high, giving a little bit space. And yeah, actually that worked out, and price went rapidly down and took my take profit. So it was actually a good trade, and yeah, I stuck to my trading plan and I just executed the trade. But the first trade, I didn't stick to my trading plan, so it was a very bad loser. And the second trade, I stick to my trading plan and I just executed the trade, and it was a good winner. So, so clearly, the fear of missing out emotion kicked in. So I must eradicate that. And yeah, as I told you already, price just came down and it mitigated the 4 hour slash daily demand. So now the coming Monday, we can expect the price to switch the internal structure to switch bullish, and then we can look for longs, or who knows, we can also expect the price to make a deeper internal pullback, or even take out the strong swing low because the daily is so much elongated and it can make a deeper swing pullback. So in that case, this daily demand would be invalidated and this strong low would be taken out. So that is a different story for the next week. But for now, to summarize EU, I got one good winner and a bad loser. So why is this called a bad loser? Because I was not, I was fooled by my FOMO emotion and I manipulated the H1 lid and I took the wrong trade and I got stopped out. So it's definitely a bad loser. So yeah, that's it from EU. So let's jump into GU and see what happened on GU. So let's start the analysis of GU. So in GU, as I already told you, I got one winner and it was same the phase C shots and I got the required revenue. So this winner is actually a good winner and both intuitively as well as technically, I felt that it was a medium probability trade. So let's jump into the analysis and see what happened in GU. So the daily, actually the chalk bearish and similar to EU, there was nothing to the left from which the price can react from. So it doesn't mean the price can't react, price can't, push up and take out the daily target. You can see the price actually pulled back, but it reacted off from nothing. It reacted off from nothing and it pulled and it pushed up. So, so, but most of the times, price will react to something and some POIs or some area of values, and then it can push up. So here I just assumed that the price can come down since it there is nothing to the left, so I can assume that the price can stick to this bearish order flow and it can come down to take out into tap into this daily demand. This is not a high probability demand, but still, in the lower time frames you can clearly see that this is a very good demand. So if I jump into the 4 hour time frame, you can clearly see that. Yeah. So you can see the pullback is so much visible in 4 hour time frame, and within that 4 hour time frame, we can see there is this pivot candle uh, that is valid within this daily demand zone. So to talk about the 4 hour swing structure is bullish, and the internal has shifted bearish, and there is nothing to the left, so I can expect the price to come down. Then it mitigates the 4 hour demand, same as in the EU. So there is no POIs for me to trade in the 4 hour time frame. So this POI has been mitigated, and this POI didn't make any significant change in significant market shift. So the only thing I can do is jump into the lower time frames and see if there is any POIs, or then wait for the bearish sweep zones to be formed, and then take trade from those POIs. So if I jump into the H1, fortunately I had this POI. This is not a POI. So, pardon me. So this is not a POI because this POI it did not cause any order flow change. So it is just if this POI had taken this weak internal low, and this would be a high probability POI. But since it did not make any order flow shift, it's not actually a POI. So I marked it wrong. It's my mistake, and yeah, today I made so many mistakes, but still it played out. So I can't with this point is you can reject this point because I cannot take trade from here because it is not a POI. Thankfully, I didn't get any trades. Uh, Reject this one because I can since I consider this as POI. So I marked these things with the POI. So it became high probability trade, but intuitively I was saying to myself that it was a low probability trade. Now I know why, because it's not actually a POI. And yeah, price actually rejected off, I mean, invalidated this, you know, I don't know, this is not a POI, this wrongly marked POI, and then price tapped into the extreme one. You can see here, this got rejected and price tapped into this POI. But this POI is a it's a low probability POI. Why? Because it is already been indicated. So price took the H1 supply, thus the trade is now invalidated. Price reached the discount prices of the swing range. Thus, if the price stock bullish, I could look take the phase B longs, but having the risk of extreme supply within the strong internal high could play out, and the price can make a deeper internal pullback into the polar demand. So I'm just saying that uh, since the price this is the chalk, I mean the chalk level. If the price reaches this chalk level, I can expect the price to continue the bullish chalk, I mean, the bullish order flow, and then take out the strong internal high. But there is this POI. So if the price makes a bullish top and then comes down, it can respect this POI and then it can push down to take out the strong, I mean the weak internal low. So if I want to take shorts, then I must break even my trades once the price. I mean, if I want to take longs, then I must break even my trades once the price reaches the 16 POI. If I want to take shorts, then I must make sure that this POI holds. If this POI is invalidated, then shorts are invalidated till the price reaches this POI. Even if the price reaches this POI, I must wait for a bearish chalk because this range is very large. I must wait for a bearish chalk and then take shorts from this POI. And yeah, this POI actually held itself, but I was very less confident because it was already mitigated, and you can see basic conditions, high time frame narrative supporting the yeah, and it is in line with the medium time frame also. So this is the fractal from here to here is the fractal order flow, and it's bearish. So what are the POI criteria? It didn't sweep liquidity. You can see it didn't sweep any liquidity. It has made displacement. It has made shift in the order flow. It is actually mitigated, and but this mitigation provides an inducement for the price to play out. So only three criteria has been met. It is actually four criteria. It was formed during the kill zones. So yeah, you can tick this box and you can call this as a high end of medium probability trade. But it didn't flip any demand zones. So it is a medium probability trade with a medium probability POI, but intuitively it was saying to me that okay, there is nothing to the left. The price can come down until price reaches this 4 hour demand. So but I just wanted some extra confirmation for me. So the price actually chalked bearish, and once the price chalked bearish, there was this area of demand, 15 minutes demand, which the price was holding to. So if this demand fails, then I would be very much confident that okay, the price can that the supply has took control and the price can go down. And yeah, this demand has been taken out. So I place my order right here. It is, I know that it is very less likely that the price will tag me in, but if the price tags me in, that this would be a high probability trade because there is a low resistance liquidity, Asian low, and there is nothing to the left from which the price can react from. So it's a clean trade, so very easy, very high probability trade. But the thing is, it is not in the optimal trading trade. It is in discount prices. So anytime the price can reverse and start the run leg, especially with a news coming up. So fortunately, I got tagged in, and at 13:34, I got actually tagged in at around I think around 13 115 I got tagged in. So 130 around 115 115 110 I got tagged in, and once the 13:30 I mean the 113 news started, I took my stop loss just above this high. Expect if the the one news candle can be either bullish or bearish. If the news candle is bullish, it will not just go up here and then come down. It will go rapidly up. Uh, it can go long way up, which means that my stop loss could also be taken out. So if it wants to go down, then it can go down as per my analysis. So either way, that's why trading in the news is very interesting. You know, at that from 13:30 to 13:45 or 14, you know that either within the half an hour window, you know that either you can be stopped out or your take profit can be hit. But the thing is, your prop firm should allow you to trade during the news. If that criteria is met, then you can trade during the news and you can expect within the 30 minutes window either your stop loss would be hit or your take profit would be hit. So in my case, my take profit was hit, and yeah, the this was the news candle. Uh, my take profit was hit, and yeah, as expected, the price mitigated this H1 demand, which was within the 4-hour demand. So after this one, we can expect the price can, let me jump into H1. Yeah. After this, after the price tapped into the 4-hour demand, we can expect the price to make a strong, expect this strong low to hold, and the price can push further up. But I must keep in mind that the daily can make a deeper internal pullback with this low resistance liquidity still not yet been taken, with high chance that the price can come down. If this demand fails, so there is no demand to the left, so it is a very low resistance liquidity, and price can just rapidly push down to take out the strong internal low, I mean the strong swing low. So that is trade for Monday, I mean the next week. Until then, it's a very good trade, and yeah, it's a very good winner, and I took the profit. Thank you. Let's jump into XAU and see how I missed the trade and what emotions hit me during the trade that caused me to miss the trade. So let's jump into XAU, guys. Let's see what happened in XAU, and there is a missed trade that was in New York and it was AC, same. Since all the pairs depend upon the USD, so kind of all the pairs were in phase C. So the trade probability was, for me, it was a low probability trade, but technically it was a medium probability trade. I could have taken the trade because it follows the technicals, but since I followed my intuition, I was not able to capture the trade. It was very clear that it is PKFOL, fear of losing. So in GU, I got fear of missing out. There in XAU, I had fear of losing. So I think I need to work on myself to eradicate these kind of emotions because when these emotions compound itself, my equity curve would be declining. So if I eliminate these emotions, I can expect my equity curve to grow. Otherwise, it will come to a stagnation and I'll be in the break-even dance. Okay. This is daily of the gold. The swing structure is bullish and the fractal structure is actually bearish, but price is very much consolidating and it is accumulating both sell side liquidity as well as buy side liquidity. So with the 13:30 news today, so we can expect the price to take both buy side liquidity and sell side liquidity, or sell side liquidity and buy side liquidity. Anything can happen today. So this is the 4-hour structure. The swing structure is bullish, and the internal structure is bearish. So it is in uh, swing pullback phase. And yeah, this is actually the weak low, the strong high. Disregard this one. So actually, price made a bearish chop. So this would be the bullish chop, but the price made it equalized rather. So this is actually the fractal nature, the fractal structure. So, so the fractal structure is also bearish. Internal is also bearish. So this could be a POI from which I can look for trades, and I can look to target a small weak low. But remember, this small weak low is actually uh, swept some sell side liquidity and it has pushed up rapidly. But this low failed to take out this high, and yeah, so possibly today price can move up, take out the buy side liquidity and all the equal highs above, or since this low uh, didn't take out this high, so this low could be taken out. So it is a very kind of mixed signal to me. So I was very much not interested in the trading XOU because I just wanted XOU to show up itself. You can see like this is a trending market and I know that the price is gonna go up. But since the price is very much accumulating, I was very much hesitant to take trade in XOU because I knew that price can go in either direction and I don't want to get caught in the wrong side of the market. And yeah, price has actually formed a triple bottom, I mean the triple top. So this is what I already told you in daily. So price can go up, take out all the buy side liquidity, and it can push down. This is H1, and you can see this is the daily triangle pattern, and it is seen in the H1 very clearly. So if I zoom in, swing is bullish, internal is bullish, and currently the price is consolidating. Price made a strong liquidation of the buy side liquidity. Thus, if the price makes a bearish high chalk, then I can continue to follow the subfractal order flow. Remember, it is not a fractal order flow; it is subfractal because from this high uh, to this low, sorry, from this low to this high is the fractal structure because price made a bullish chop here. So which means the fractal low is right here. If the price wants to make chalk, then the price must come down, take out this low, which is the real chalk. Anything between this one would be, I can call that as internal chalk. So price actually made I chalk here. It swept the buy side liquidity and it has made I chalk, but it is just I chalk, not a chalk. So that's why I was very much hesitant to take the trade because in EU and GU I got actually a very good chalk, whereas in XAU I just got an I chalk. And still the medium time frame order flow is bullish. So I can look for the M15 confirmation entry, but since it was against the medium time frame order flow, I didn't take the entry. And yeah, price actually uh, took the chalk and it started to go down rapidly. So yeah, I could have taken this trade. You know, once the price made the chalk, the internal chalk, I could have waited. And even in M15, I got the M15 confirmation entry, price tagged me in and then pushed down. So that would have been a very good trade with the M15 confirmation entry, but I didn't take it because the I was trading against the immediate medium time frame order flow. But yeah, the medium time frame actually chopped bearish. That was high chop, but technically it was a low probability trade. But sorry, intuitively it was a low probability trade. But yeah, kind of a mixed trade. I could have taken it could have played out, but at the same time it could have not played out. So you can say I I don't know, but yeah, you can just read the notations. There was improving confirmation entry, but I did not take the trade as I was with two trades already that were running in profits, and I don't want to take another losing trade to spoil my trading day. So I can say, all the logical reasons for not taking the trade. But if I dig deep into my mind, into my subconscious mind, and analyze why I didn't take the trade, it is because I already had two trades that were in the profits. So I just don't want to take the trade, which actually gave me kind of mixed signals to end up in a loss. And this is not the first time it is happening. It has already previously in the past. Every time I take a profit, I become a bit conservative and look for only high probability trades. And when I'm when I'm in a losing streak, I became very confident. I can take uh, flawlessly all the trades. So for example, I took one winning trade, long back, I think a week back, and after that winning trade, there was four consecutive losing trades. I think more than that. And all the trades I took very flawlessly, and all the losers were good losers because uh, the first losing trade would it's kind of revenge trading, but I'm sticking to my trading plans and I'm taking the trades flawlessly. So it's kind of revenge trading, but sticking to the trading plan. But when I take a profit, I'm becoming conservative and I'm not taking the trades because I am feared of losing my profits. So to come in conclusion, it's just fear of losing. So now having been taken two profits, so you can see me like I can be conservative for the next 2 to 3 trades. I mean, if the 2 to 3 trades are losers, then I'll become aggressive and I'll start to trade. I'll start to execute flawlessly. So I think I must stop this cycle because once I take profits, I must not goes to that conservative mode. And because if I start to take aggressive trades, I must stick to that aggressive nature throughout my journey. So because consistent actions becomes consistent results. So once I take, I can't be conservative for a short period, and then depending upon few trades results, I can't be aggressive for another period. So that will disrupt the cycle, and it will definitely affect both my psychology as well as my uh, equity go. So this is all about myself. If you guys also face the same problem, then you need to fix it. So I just journal. So since I'm journaling for you know past 3 to 4 months, I think it's actually day 90. So you can see that's actually it's been 3 months that I've been journaling. So I can find faults in my psychology, in my mind, and in my subconscious mind that is hindering my profits. So I'm just eliminating one by one. So let's see. At one at one at one stage, I can suppress almost all my uh, psychological errors, so I can become a one of the trader that executes flawlessly. So that's it from today's recap of day 90. It's a very interesting day because there were profits and there were a lot of mistakes, especially psychological mistakes, and I addressed them very clearly here. And yeah, to summarize, in GU, I had fear of missing out trade. Sorry, I had a FOMO emotion, and in XAU, I had a FOL emotion. And coming to the results, in EU, I got one, sorry, I got one loser, and I got one winner. And in XAU, sorry, and in GU, I got one winner, and in XAU, I missed one beautiful trade. So, see you on the next recap, guys. So, cheers, bye.